So what we're going to do in this first homework example is interpret a company's statement of stockholders' equity so we can get an idea of what the company has done as far as transactions that affect their equity during the period. So what we're going to look at here is an example with Coca-Cola. I can see on the company's statement of stockholders' equity that they have common stock that's being issued. They don't issue preferred stock, so we don't see any balances for preferred stock. We'll see an amount for their APIC account, which is also referred to as their capital surplus. I'll see their amount for retained earnings here, otherwise termed their reinvested earnings. I'll see that they have also repurchased stock, as I can see that there's account balances for treasury stock. So the first thing that we're going to do is I'm going to look at how much additional common stock did Coca-Cola issue during the period. And I want to see if there's a change in balance between their 2015 ending balance and their first quarter of 2016. I see that their common stock balance has not changed. Their number of issued shares has not changed as a quantity either. So we can infer that the company has issued no additional common stock, which makes sense that for a company like Coca-Cola that's in a mature phase, they aren't issuing any new shares at this time. And I also see that they're actually repurchasing their shares. So we can see that there's amounts for treasury stock. Next, I want to look at how many shares are outstanding at the end of 2016. So for Q1. What I want to look at is I want to consider what I call a tree in terms of looking at the company's shares and what occurs with those shares during the period. So the first thing that I want to start with is what is the company's authorized shares, the maximum number of shares that they can ever issue per their corporate charter is 11,200. All these amounts are in millions, of course. And with their authorized shares, these shares are either issued by the company at some point or unissued. If I look at the statement of stockholders' equity, they currently have 70/40 of issued shares. So I can infer that if they can ever issue a maximum of 11,200, they've currently issued 70/40. Means the company currently has a balance of unissued shares of 4160, which means if they ever needed additional cash, they can look at issuing this number of shares, which they have a lot of extra shares that they could issue to get cash if needed. Within this issued share bucket, then the company either has repurchased the shares at some point or those shares are currently outstanding. So I can break this 70/40 amount into treasury shares, which means the company has repurchased this amount, or outstanding shares, they're currently held by the public. If I look at their treasury stock, it says that the company has currently repurchased 2708 in shares. So they hold within their treasury 2708 of shares. They repurchased that amount in the past. So their treasury stock balance will be 2708, which means their current shares outstanding must be 4332. Because they've only ever issued 70/40 of shares. They've repurchased 2708 of these current issued shares, which means if I take 70/40 minus 2708, this will give me the amount of shares that are currently outstanding by shareholders during the period. So 4332 are going to be the current outstanding shares by Coca-Cola shareholders during the period. Next, what the question asks is, using the common stock and APIC accounts or capital surplus accounts, what's the average price that Coca-Cola issued its common stock at? So if I take $17.60 for their common stock amount, and remember this amount relates to the value of their par, plus their additional paid-in capital of $14,507, I get a total value of $16,267, which if I take this divided by the number of shares that are currently issued, the 70/40, I get a average value of 231, which means that whenever Coca-Cola issued its common stock, on average, the shares were issued for $231. So now because Coca-Cola does a lot of treasury stock repurchases of their shares and holds them as treasury stock, what I want to do is I want to look at what price on average did Coca-Cola acquire those shares back for. So what I want to look at is their current value for treasury shares, which is 45,549. So as a whole, Coca-Cola has paid this much cash over time to repurchase their shares. So if I take 45,549 for the value of their treasury repurchases, divide that by the number of shares that they have repurchased, the quantity, 2708, I get an average repurchase price of $16.82. And as an investor, what I want to do is I want to compare this average repurchase price to the current stock price for Coca-Cola. Their current stock price is about $45 that it's trading at, which means that if I look at their average repurchase price of $16, they repurchased the shares at a cheaper amount than what the shares are currently trading at in the market at the $45 amount, which means that they purchased or repurchased their shares low and will be able to issue them at a higher price, the $45, and that's the cash they would receive from investors if they were to reissue those shares at a later date. So it worked out well for Coca-Cola to repurchase their shares. They can later reissue those shares at a gain.